Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for the segment, we have Matthew Bartlett, Head of NFT Community and Web3 at VanEck, to discuss recent developments impacting the onboarding of new Web3 users, play to earn, and how game makers will onboard even more users into Web3. Matthew, it's great to see you. Welcome to Trade Talks.
Thank you.
Why are NFTs increasingly important to components to play to earn and Web3 gaming?
Sure. Well, it starts with the concept of interoperability, which simply allows ownership of assets to be proven and then transferred from one owner to the next. So the ownership is built on the backs of NFTs, enabling a way to tokenize almost any aspect of a game, from the land where the game is played to the character to the wearables. You could think of things like shoes and watches and jetpacks, even vehicles, right? But all of these assets make up the building blocks of the ecosystem, and all of these assets can now be owned by players. And that's kind of the key point, which is ownership versus the traditional model, which looks more like a leasing model.
Let's talk about categorizing NFTs and examples where play to earn can be a mix between real and digital. In fact, we can bring up those first two slides again, just to highlight those points.
Sure. So these in-game assets can represent many things, but if we just consider the playable avatar, people like to think of the PFP or picture for profile, simply art, maybe identity, but there are scenarios and supporting projects that enable that avatar to become a playable character in a game, right? So again, these categories could be land, the music playing in the background, which you could own, a weapon, or the ray gun pictured here. But these could all have value, right? In some way, depending on the rarity of the item or even the popularity of the project. But overall, these are the main categories. So to your point, there is this opportunity for assets to blend categories. So in some cases, we could acknowledge that it's okay for something like art to just be art, or collectibles just a collectible. And these could represent like a one-hit wonder that's still profitable. But more and more projects are hybrid, right? And so they might cover that real world component, something that's more tangible, as well as digital. So a great example, and this is one that I'm involved in, is called Atom Car Club. So you have this real life car club built for car enthusiasts. The community even sponsors a NASCAR driver, Julie Landau. But then at the same time, the NFT or digital collectible represents ownership in a digital race car. You have track pieces, you could race your friends, etc. But the point is, this is a perfect example where you're blending game assets with something like memberships, and then of course, real life with digital.
Right. And I think one of the attractive things with NFTs, it really does lend to that community component, which is really attractive to people who are in the gaming space. Matthew, talk to me about the economics of play to earn.
So right now, the current economic models, you have really game as a product, game as a service. And so with the first, you have this upfront cost, usually a high dollar figure. With game as a service, this is looking for ways to monetize the game after the initial sale or giveaway. In either case, the economic benefits tend to only flow in one direction, right? And that's towards the publisher. So even though many game as a service games are free, the game is still built to entice players to spend money, right? Whether it's in-game items like skins or weapons or battle passes. So there's no real flow back to the gamer besides that fun and enjoyment. In contrast, whether it's play to earn, play to own, free to play, free to own, depending on the model, the benefits start to flow both ways. Whether you have the publisher making money as the players buy the in-game assets, but at the same time, the players can now sell their assets to others in an open marketplace, potentially at a profit.
Let's talk about onboarding for a moment here. How are recent developments impacting new Web3 users and the overall interest in the space, and how game makers are going to onboard more users into Web3?
Yeah, so I mean, the recent events were an obvious setback. There were a lot of projects, though, that got weeded out because of a lack of runway of capital even before this, though, right? So you had these teams with the right ideas, the technology talent, but they're now broke, right? So the upside there is that there are many projects who got the runway they needed for a sustained, prolonged slowdown. But bottom line, the building will continue. The result is just going to take some time. Mm-hmm. In terms of onboarding, our view is that if you're going to create a new title, you really have to accomplish three things to succeed. The first two, you have to start by creating a fun game. and make one that's accessible. And that's how you get in front of the massive audience of global gamers. So one game that we feel is really checking those boxes, and this is one that your audience can try for free and see what I mean. It's EV.io. It's accessible in that it's a browser-based game. You could play it on a decade-old Chromebook. And that's so important to have this low barrier to entry in terms of technology so that you can get in front of folks in emerging markets, for instance, who could play and discover the game. Second, it's fun. It has these Halo-like elements. It's fast-paced, 2 clicks and you're in, short 4-minute rounds. But lastly, and this is key, crypto mechanics are secondary to gameplay, meaning you could play the game and never need to think about a crypto component. There's this revenue model where there's a place for players to buy the NFTs and accrue the token, but it's just not required. So you onboard by making it fun, accessible, prioritize gameplay.
And Matthew, this might be a remedial question to someone with your expertise, but how long does it take to develop a game from concept to execution to users enjoying it?
Yeah, I mean, it could be years. It depends on runway and the talent of the team. Right now, developers have been a real premium. You'd have to pay a high amount to get them. Of course, based on what I said a moment ago, with some of these teams running out of runway, all of a sudden there's a lot more people who could help build your game, right? I mean, You don't want to make a light of it, but that's the case.
Yeah, well, that's a great point that you make. And finally, where does VanEck see the direction of gaming headed?
So we believe that crypto gaming has this potential to onboard millions, maybe billions of crypto participants, right? I mean, I think there's 3 billion plus people who will play some sort of a digital game this year. And of course, this business model allows players to participate economically through ownership. The free-to-play, free-to-own model, I think it's still sort of unproven, but could be how we get scale. So in short, create a game, perhaps on a mobile device, make it fun, make it high quality, and get it distributed worldwide. So give away the characters, the weapons, and other game items for free. So it's essentially growth via free-to-own model that ultimately comes down to inclusivity and not financial barriers.
Right. All right. Appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.